Good, good afternoon, everybody, and welcome to today's Experience UK webinar with Provalgo, looking at navigating currency risk in the Middle East. So today I'm absolutely delighted to say we're joined by Ricky Torres, who's the Head of Desk and Relationship Manager at Provalgo. Hi, Ricky.
Hi, Emily.
And Harrison Sharp, who is the Business Development Manager at Provalgo. Hi, Harrison.
Hi, Emily.
So for today's webinar, we're going to be hearing from Ricky and Harrison about the pitfalls and opportunities in managing currency risk in the Middle East, where we know at Experience UK, we're always passing the opportunities on. And it's really good also to know that we have in our membership and our partnerships some real experts who can then help navigate our companies through managing those opportunities once they become a reality. So it's great to have you both here. For the webinar, we're going to hear first of all from Ricky and Harrison a bit of background about Provalgo. Then we'll go into a Q&A where we can discuss some of the important issues that they're raising. We'd really like this to be an opportunity for the companies who've joined us this afternoon to raise their questions, begin to start a dialogue. So please, if there is something that really chimes with you, or you would like to ask Ricky and Harrison something, there's a chat function where you can drop a question in, and we'll take those at the end of the webinar. If I remember, I'll remind everybody to mid webinar to put their points in there again. So welcome everybody, thank you for joining us, and I'll now hand over to Ricky and Harrison.
Thank you very much, Emily. Pleasure to be here. Really looking forward to presenting Provalgo and also answering the questions that the members will have. Could you bring up the slides for me, please? Thank you very much. Good afternoon, everyone. I hope you're doing well. My name is Ricky Torres. I'm one of the heads of trading at Provalgo. I cover corporate and institutional clients here. So I work directly with CFOs, finance directors, treasury managers, business owners across the UK, Europe, of course, in the Middle East as well. And today we'll go through who Provalgo is, but also some more information about how to deal with companies that are transacting with suppliers from that region as well. The first thing to bear in mind is Provalgo is a fully authorized and regulated financial services company based in the UK. We are regulated as an electronic money institution. We cover approximately £2 billion worth of currency flow per annum. We deal with over 140 currencies on a single online platform, and we deal with over 100,000 payments per month. And we were able to send those payments to 180 countries. Recently, we've been recognized as one of the fastest growing companies in the UK. In terms of the verticals that we provide services in, you can think of Provalgo in four main categories. Number one is with our FX risk management solutions. Number two is with our payments, so being able to send and receive funds from around the world. Number three is currency exchange services. So if you're holding on to British pounds at the moment, you need to convert that into dirhams, US dollars, euros, and a wide variety of currencies. We can take care of that for you too. And the fourth area that's not on this slide is we're able to open named bank accounts for our underlying clients, and I'll come on to what that means a little bit later. Short page here on some of the testimonials that we've got and the ratings. I'll happily provide a link to that after today's meeting, but of course, clients, the whole reason why we work in financial services, the name gives it away, is to service the client. And so every one of you guys that are looking and viewing the webinar at the moment, our whole business model is to service you from a financial perspective. So whether that is payments, FX, whatever it may be, clients come first and is a big part of why we exist. And so we can share with you the links to those reviews afterwards. Page here on risk management. Now, we will go into some more details and answer your questions in a future slide, but essentially, I think this is a good opportunity to go through what risk management is from an FX perspective, and also how you can mitigate that currency risk. A lot of clients that we work with that are based in the UK will, of course, be trading in British pounds, but the suppliers that they deal with are international. They may be in the Middle East, they may be in China, um, they could be all over the world. And of course, at that moment, when they need to exchange those British pounds into a foreign currency, they can either go to a bank, so Barclays, NatWest, Lloyds, HSBC, all of the high street banks that we're familiar with, or they can come to a regulated provider, and that's where Provalgo sits. Some of the reasons as to why clients would choose to do that: one is speed of delivery. What we've often found with our risk management services is being able to get hold of account manager at a bank to discuss foreign exchange risk management solutions can sometimes be a bit of a challenge. And if you don't meet certain thresholds of currency exposure, you may not necessarily get direct access to a dedicated account manager that can support you through that process. The process would be, of course, first identifying the currency exchange rate that you need to factor into your budget plans, the bottom line, but also the staging or the staggering of payments as well. And so with our risk management solutions, what we promise to clients is to do a fact find, understand all of the clients, all of your requirements from a foreign exchange perspective, how much you're looking to convert, what is the timescales that those payments need to be made? Is it 50% upfront when you first put the order in, and is there a payment plan afterwards? How long that will take? And we together would come up with a bespoke FX risk management strategy for you, the client, provide you with that information. Going through that process, what we aim to do is to effectively mitigate the currency risk between one currency and another. And as we all may or may not know on this call, currency markets are incredibly volatile and are susceptible to changes very quickly. And we see this on a daily basis from whether it's the UK political economic situation or whether it's across the pond from the US perspective, whereby Trump is in power and it's very difficult to predict what he's going to say and do next. All of these things have a knock-on effect in the currency market, and managing that can be very challenging. So our goal is to help our clients navigate a very complex space, fix the exchange rate, provide a layer of certainty and security to the bottom line. And we've got a process to deliver that. And it all starts, number one, with what we call as the fact find. Moving on, we've got an example of currency volatility. Here, what we're looking at is a chart from British pounds into the currency, which is the UAE, it's dirhams, so UED currency code. And at the bottom of the chart, you will see a timescale. This starts from 2015 and goes all the way to today, 2025. Every one of these fluctuations in the market has and will have an impact on your bottom line. If left unmanaged, what you can find is that the original price that you agreed with the supplier may not either exist anymore, or alternatively, when you do get the products back onshore to the UK, that those final payments, the other 50 or 25%, whatever the payment terms may be, you may find that you're overpaying.
Ricky, you've gone silent. We can't hear you.
That's okay. I think I'll just step in here, Emily. I think
Great, thanks, Harrison.
whilst Ricky might just be sorting out his headset, just touching on the current graph. This is a great example of volatility within a currency pairing. And one of the things that, as part of my role here, and through our partnership with Experience UK, is to go through a short consultation with the business. We get to understand where you are susceptible to market volatility, whether you do have external contractors or suppliers in which you're making regular payments, whether that be in dirhams, dollars, and any others. And we will take the time and look at where the market is currently placed. If we see it's quite cyclical, as you can see from this graph, there are regular patterns and trends that we can see and we can follow. And so we would take the time to work through with you to come together, to agree on a viable solution to mitigate that risk. Ultimately, if you are always making these exchanges at the bottom of the market, then you're missing out on potential revenue gains on the projects or the deals that you're working on. So stepping into one of our other verticals, another advantage to having a Provalgo account, taking the currency risk management piece and putting that to one side, our payment network. As part of our license, we have a global banking network of up to 14 counterparties now. And what we mean by a counterparty is a banking institution, of which multiple of them are tier one. So the likes of UK tier one high street banks, they enable us to deliver payments up to 180 countries across a wide variety of currencies. And I think one thing that I've learned from talking to lots of clients is often overlooked with direct banking access and settling or paying locally. An international transaction, if you're familiar with that, it's part of the SWIFT network. So that's an international transaction. You do have a tracking code, but sometimes there's lots of intermediary banks in which that payment has to be processed and cleared. Now, working with a traditional bank or a neo online only bank, you lose oversight on that transaction. And through working with a regulated EMI like Provalgo, we have access and we have the details, the transaction details, in order to safely track that transaction. If there is to be held up at any intermediary banks, then we have our own team here that works through that in terms of settlements and compliance. So you do have a helping hand in resolving that transaction if there were delays. And so I think that's one thing that we try and focus on, and that we do very well here, is really helping to support you with your international payments in that respect. Are you back in the room, Ricky? Have we lost you?
I think the sound is not working. Yeah.
I think we've got you.
Okay?
Yeah, I've got you. Yeah, I've got you here.
Fantastic. One of the other solutions that we provide is the currency account solutions. I touched on it on one of the previous slides. Currency account solutions allow Provalgo to open named bank accounts for our underlying clients. This means that we can open accounts with NatWest, Barclays, Clearbank, and a variety of other banks in the underlying client's name. What we will then do from a technology perspective is attach that account to the Provalgo platform, whereby you can see the funds on the account. It's a really good solution that allows you to send funds from a bank account in your own name, but also to receive funds into that account as well. Okay. Security of funds. Harrison, can you pick this one up?
Yeah, of course. As mentioned initially, we are regulated by the FCA, Financial Conduct Authority, and we hold an electronic money institution license, which is the highest regulatory license you can hold within the UK without being a bank directly. What this means is we have strict measures and policies that we adhere to with regards to safeguarding of client funds and data protection. As a UK business, through our regulator, the FCA, we are audited by our banks monthly, annually as well. And so we are at the forefront of updating our policies and measures to ensure that all of our funds and the policies we have in place are up to date and are current. In simple terms, all client funds that come into Provalgo, we safeguard and segregate those funds from Provalgo Limited, and we do that using one of our tier 1 UK banks. And so Provalgo Limited, if anything was to happen to us, if we were to go into liquidation, all of our client funds that we are holding in safeguarded accounts will be returned to our customers and our clients directly. It is separate from Provalgo Limited, and this is a very difficult license to obtain, and we've held this since 2018 now, and we're very proud to be a license holder as well as a privately owned business. We are striving to be at the forefront of all of our compliance measures and following in accordance with our banking partners, to which this is growing. We are increasing our banking capabilities. But so coming back to the forefront in terms of security of your funds, the funds are 100% secured when they are within the Provalgo Limited accounts. This is different to a traditional personal bank account where there may be a limit on those funds. I believe it's 85,000. We, as part of our license, we are within a different area of financial services, and so those funds will be 100% secured as part of our policies.
Brilliant. Thanks for picking up that slide, Harrison. I was just double checking my headset was still working. So thanks for picking that up. Look, with the slides, we didn't want to overcomplicate who we are and what we deliver. So I thought we would keep it quite short and sweet, but leave it open for some questions that we can answer and go into some more detail. So as you can see, next slide, that concludes the slides of us. But I didn't know if there was any questions either from you, Emily, or from the floor in terms of anything FX payments or dealing with that particular region in the Middle East that we can assist you with.
Thank you so much, Ricky, and thank you so much, Harrison. That was a really excellent, clear overview, and very impressive to hear all the excellent licenses and safeguards that you've managed to put in place and then hold on to. The first question that I have is actually going right back to basics. So it's only just dawned on me that FX means foreign exchange. And I'm just wondering, as a layperson, whether you could kind of give us a really basic overview of what is foreign exchange, demystify some of those terms, and really give us a kind of sense of what are the essential things that business owners need to know about this area, who are not experts, as you guys are.
It's a really good question, and sometimes working in the industry, you almost forget that it can be quite complex from the outside. But just to boil this down in its most simplest terms, UK business will be trading in British pounds, and whenever they deal with an international supplier, be it whether it's German cars or Italian wine or chocolate from Belgium maybe, at some point they would need to convert those British pounds into a foreign currency to pay for those goods. And in that example, all of those countries are based in Europe, and so that UK business, the finance director or the business owner will need to convert the pounds into euros, and at that point the most logical next step would be to go to the bank, and that's historically where people would go, to the bank, of course. However, over the years, the market has moved on from the banks, and one of the main reasons is due to pricing. With one of the things that I would recommend all business owners, CFOs that are dealing with foreign currencies is to understand what their margin is with their bank or broker. You can ask, your provider, and they'll give you an answer. We can check the historical trading data to give you an estimate in terms of what you're currently being charged as an FX margin. And it's rule number one, if I was to tell one of my closest family friends that what they would need to do is to find out what that margin is that they're currently being quoted. And the next step is to ask if that margin is fixed. Historically, the secret source of foreign exchange where banks and brokers have made their money is on what's called a variable margin, meaning today you may get a very attractive foreign exchange rate, which looks very competitive. However, due to the nature of foreign exchange and the markets are constantly fluctuating, this presents an opportunity for either the bank or broker to widen that margin. And we call this in the industry honeymoon rates. So the honeymoon rates at the start of the relationship look fantastic. It's how insurance companies get you through the door right on the comparison websites, and then you get that bill 12 months later and it's doubled in price. That has historically been the business model. What we have done at Provalgo is to confront that sales tactic by doing two things. Number one is putting the margin that we are charging on the platform directly. This flies in the face of how brokers and banks make their money because they work on variable margins that are not always clear to the client. So we've addressed that elephant in the room. We've pointed at it. We've built a platform that shows the margin. Number two is we will fix that margin. So every time any one of our clients sign on to the platform, they can see the percentage point of the FX margin that we are generating from that trade. To do this in this industry is unheard of. Most providers won't share that information with you because it's how they generate revenue. So what I would recommend to anybody on this call is to, number one, find out what that margin is and find out if it's fixed. And then you've got a baseline to work with. The other thing is when you're converting currency, the foreign currency that you're converting into, whether it's Saudi riyals, whether it's dirhams, whether it's US dollars, euros, these are all individual markets, and so they will have their own risk attached to them. And so if you're trading sterling euro, it's a fairly stable market. It stays between 116 and 120. However, if you're dealing with Chinese yuan or dirhams, they're a lot more volatile. And so the conversation around managing that FX risk moves further up the priority list when you're dealing with those regions. And so recommendation number two would be, if you are dealing with more volatile currencies, and a volatile currency would be anything outside almost the euro, even the dollar. We've seen a huge amount of volatility just recently. It peaked up to above 128 today. I would certainly reach out to your provider and ask how to go about mitigating that risk, and putting a strategy in place, because not every currency market is the same. They've all got their own risks associated with them. There's a couple of points there. Does that help answer your question, Emily?
Yes, absolutely, it does, and it's very useful. You've touched on another couple of things that I was going to ask you around the main considerations that business owners might want to be taking in terms of the risks on currency exchange, and it might be helpful to get some kind of kind of case study example of a project where you've employed some risk management strategies and how that has helped a client.
Sure. So one of the first challenges is, let's put ourselves in the
I'm so sorry, Ricky, your headset has cut out again. I think we need to hand over to Harrison.
That's
I'm
okay.
afraid.
I think you mentioned here a specific. Oh, are you
I'm
back?
back. Sorry, I'm really not sure what's happening with the headset today, but can you hear me okay?
Yeah,
Yeah,
you're fine.
fantastic. So one of the first challenges is, we're a UK-based business. We want to buy a product from overseas, and we don't understand if we're being charged fairly, because of the exchange rates confusing to us. So give you a good case study. We're working with a client based in the UK that's now dealing with Saudi Arabia, and of course the local currency there is Saudi Riyals. There's two ways to look at it: either that you're a UK business and you're being supplied by a foreign partner, in which case you're buying products from them, or the other way around, where you're a UK business and you're exporting either products or services as well. The very first thing that you're going to want to understand is your price point. And so how you go about doing that is, first you will have a price point in sterling. The next step is to understand what that price point means in the foreign currency. And to do that, you're going to need a live exchange rate. What many people mistakenly do is go onto Google and ask Google for that rate. That won't give you a true representation of where the live market is at that point, because typically speaking, either that data is 10-15 minutes out of date. Also, it will give you what's called the interbank rate. So it means the mid-market in which banks and institutional hedge funds are trading against. It's not necessarily the exchange rate that you as a retail small medium-sized business will be able to achieve. And so understanding what that exchange rate is really important. How you go about doing that is reaching out to your bank or provider that you have in place at the moment and understanding what that exchange rate is. Okay. The other things that you're going to need to consider is the payment terms. How much are you paying up front, or how much are you receiving up front, and what is the timescales in which you're going to either send or receive those funds? That time period is what needs to be hedged, because that's where your currency exposure lies. So it may be 30 days, 90, maybe 6 months. Every business has different payment terms, and so it's quite unique to that individual client. But you're going to need to obviously hedge the risk of that window from when the product's either been delivered or received, and use either a forward contract. Forward contract is a hedging instrument. Your bank or provider will have those. They're fairly standard, a traditional hedging solution. But what it will allow you to do as a business is fix the exchange rate on day one, and give you a window whereby you will need to use that currency. So you may fix it today, and it may be fixed for the next 90 days. What it means is, no matter where that currency market moves, either up or down in that 90-day window, you've got a fixed rate of exchange between those two currencies, and therefore you've got certainty to your bottom line. You're not exposed to the currency market. Of course, after the 90 days, when it's time to either buy or sell the currency, you will then contact your bank or broker and deposit the funds, and they will convert it into the chosen currency.
Thank you so much. I wonder also if you could maybe share your reflections. So some of our members I know are working on really, really long-term projects. They can be over, maybe a 3 to 5 year period. Do you have any kind of reflections that you might like to share in terms of managing currency risks on
Yeah.
projects in the Middle East, looking at those kind of timeframes?
Yeah. So the usual tenor, so the length in which you can fix a currency market is 2 years. So with the more long-term contracts, for example, we work with um, uh, investment funds that are building, wind farms in exotic locations and solar panel farms. These things are not built in 2 years. They take many years to build, right? And in that scenario, you would hedge for the 2-year period. And when it comes to maturity, you would then do a rolling hedge. You would hedge and extend that for another 2 years. In that 2-year window, depending on the currency market, there are certain things that we can put in place to satisfy the payment terms of it. So if it's a long-term project and the contract says that you've got quarterly installments, we can structure the contract to reflect those quarterly installments for the 2-year period, and then further beyond, and roll that into another 2-year contract. I think generally speaking, no matter where you go in the market, the banks will hedge for a maximum of 2 years, and then you would need to re-hedge to further mitigate the currency risk. So we've got some projects that on paper are for 6 to 8 years of development work. And so you wouldn't be able to necessarily get one hedged contract for the full 8 years. It will be broken up into smaller contracts.
Thank you so much. And I wonder if you could share with us some of your considerations looking specifically at the Middle East. So many of our members are working on big projects right across the Middle East, and it would be very helpful to hear your reflections with maybe some case studies of the considerations in those markets.
So one of the big takeaways I've got more recently is, and I know this may not be easy for everyone, but definitely go out if you can and meet face to face. We had a scenario whereby a client was working with a business. Turns out, long story short, it wasn't what it all seemed, and so I think there is a little bit where, for example, Saudi Arabia is technically a new market for a lot of Western companies are either setting up in Saudi with the huge construction projects that they've already started on and undergoing. But at the same time, when you've got huge amounts of development, there are still, unfortunately, some unsavory businesses. And so if you can meet and do your due diligence on who you're actually working with, it's still rule number one of doing business. But it may not be necessarily easy for everybody. But if you can jump on a plane and go and see who you're dealing with, it's still really important from a trading partner perspective. The other request that we get is because of the access to global compliance software that we have, clients will ask us, "Hey, Ricky, can you just double check this company checks out for us? So can you screen them through the compliance software? Can you ensure that the company exists, that they're a genuine business, and use the tools that you have to just double check that and just have a sanity check that look, they're a new partner. We met them at a trade show. It looks great from the outside, but is there anything that we need to know?" And so these things don't necessarily fall into the FX category, but general principles of business, because you still need to understand who you're working with and what that further means. And so we can do that. We have had inquiries from clients that initially will send us just a website. Well, can you just give us a little bit more? Have you got a trading agreement? So we've got the business entity, and then we can see maybe who the legal representative is. If they have one, we can look through the contract. But it will give a little bit of comfort to the clients that we are working with, that they've got some information. Now, of course, at that point, it's really important to know that we are FX and payments company, and so we wouldn't want you to walk away from that conversation thinking, oh well, Ricky Torres at Provalgo said they're okay, so there must be. So we do still encourage clients to further check the business partners that they're working with, and ensure that they are genuine entities that have been set up. So for example, in Dubai, they have there's a very specific trading license. On that trading license is a barcode that goes direct to the Dubai authorities, where you can scan and check that that entity is set up, the owners are who they say they are, and yeah, you've got a little bit more comfort in terms of who you're dealing with. I think those principles exist even outside of FX, but it is quite popular questions that we get asked on from clients around that.
That's really helpful. Thank you so much. And is there anything specific to the region or particular countries within the region that you would like to just make reference to while we're here, that our members might find useful in terms of the kind of currency and FX?
Yeah, the main two that we are trading is AED, so that's the currency code of the United Arab Emirates. So I mean, typically speaking, a lot of companies are either based or founded in Dubai or Abu Dhabi. It's the main currency that's traded in that region. And the second most traded currency that we deal with is Saudi Riyals as well. The things that you've got to understand with some of these exotic currencies is that there's typically it's what's called T+1. So it's a next day currency. And you've got to factor in this when you're dealing with the payment terms. So you may say, Ricky Harrison, can you convert my British pounds into dirhams for me and send the payment today? Sure, we will action that from our side with our banking counterparties, but because of the time zones and because of the fact that it is classed as what's called a next day currency, that the funds won't arrive until the following day. And so just managing expectations around how quickly funds can be delivered, because these funds will still go through what's called the SWIFT payment network, and they would need to go through intermediary banks. So if there is an understanding that it may take a day for these currencies to be delivered, it just helps with the I suppose the client management, if you like. With the other currencies, euros and dollars, you can deliver those pretty quickly, but in that particular region, it's typically at least a day for those funds to arrive. The other questions that we get off the back of that is tracking those funds to ensure that they have arrived, because what we have found previously is that we would have delivered the funds, so they may be in the local bank in Dubai, say, but that bank, for whatever reason, has not allocated the funds directly to that client's account just yet. And so there will be sometimes an area whereby the client has said to our client, has said, we've delivered the funds. The receiver says we haven't got them. Us guys, Provalgo in the middle, we can track those funds and show you where they are in the process and say, hey, look, they were delivered yesterday. They're with the beneficiary bank. They've got those funds. Can you just ask them to get in contact with them, because they do have them? So that happens. I wouldn't say it happens 10-20% of the time. And typically what we find is the receiving bank, so in Dubai, they've received funds. They receive funds from a UK business. Sometimes they're doing their internal checks to ensure that the payment is legitimate, that there's some documentation around it. And it's important to understand that dealing with the Middle East, you are going to need to provide to Provalgo or to any partner that you deal with invoices that you've got, business contracts that you have in place to show the reason for those payments. I would say 50% of the payments that we process we will request all the information, but the banks also request it from us. And so to be organized and to have all that information to hand will help speed up the process as well.
Brilliant. Thank you so much. That's really interesting and helpful insights. Now, I'm just going to see if anybody out there listening has any questions at this point. Okay, I've got a question from our very own Claire at Experience UK. Can UK companies structure contracts and payment terms to prevent against currency fluctuations and ensure financial stability through the project life cycle?
Yeah. So at the start of a project, when you're in those commercial discussions, the exchange rate will be agreed potentially and put into the contract. That's the exchange rate that you're going to need to protect. So using a forward contract to freeze the exchange rate, right? So we can provide you with an indicative rate through those conversations early on, so that you can provide that exchange rate to your business partner and come to an agreement on what the fixed rate will be. Sometimes I've seen them that they're in the contract, other times that they're not. But it's really important that if it is, that you do protect that, because without a forward contract or another hedging solution in place, you're going to be exposed to those currency markets. And so, there's scenarios whereby you could be up and have got a little bit more than you bargained for, but 9 times out of 10, as Sod's law works, you can be at a loss, and it's always difficult then to obviously generate a profit from that contract due to the currency market fluctuations. So it is not unheard of for us to work with new clients that have been unhedged, that buy products, let's say, from the Middle East, and by the time that they arrive in the UK, the currency market has changed, and by the time they sell them to the UK market, they're not actually making a profit on that because they've lost out on the currency exchange rate, which might have moved the amount that the profit was built in. So to simplify that answer, I would say reach out to your bank or to your provider, ask them what a fair exchange rate would be, because you're going to need that when you're negotiating commercials with the business partner that you're dealing with in the Middle East.
Thank you so much. That's very helpful. And we've had another question in from Ronan. So Ronan is asking, what is the threshold for fund security under your platform? For example, 85,000 is what's covered by UK banks on any single account. Is your threshold the same? Question mark.
Yeah, I can take this one. I think as I mentioned earlier on, part of our license, with that being EMI, and we're regulated by the FCA, when we hold client funds, they are segregated and safeguarded with one of our tier 1 banking counterparties. We have no limit on those accounts with regards to a safeguarding limit, and the limit you mentioned there is being 85,000, which is a standard personal bank account. That is what effectively is insured to be returned to you should your funds no longer be there. To answer your question very directly, there is no limit or cap on the funds you can hold in your Provalgo account. They will be safeguarded and they are segregated from Provalgo Limited. If we were to go into liquidation, all of the client funds that we hold will be returned by the regulators directly to all of our clients. We have all of our audit and reporting trails for that measure.
Thank you very much. Just going to check in on the chat function to see if anybody's put any other questions. Not for the time being, but we do have some time left. So please, should anybody have any specific questions for Ricky or Harrison, or general questions, please pop them in either the chat or the questions function. I'm keeping an eye on both. And in the meantime, maybe going back to the idea of a kind of project life cycle. We've talked quite a lot about the contracting and the hedging potential and managing that initial contracting point. on projects. But is there anything that you would like to, and the very sensible advice on checking out your potential business partners in the region? Is there anything later on in terms of the project life cycle, either mid-cycle or end cycle, when final payments are being made, that you would like to kind of call out or reflect on at this point?
Yeah, I think one of a really good consideration, when you're planning a project cycle, is to see if there is an opportunity for a natural hedge, which is what we refer to, where you can align your revenue and expenses, in the same currency, to reduce the overall exposure, and the need to either be regularly making capital injection into that project and then having to repatriate those funds back into the UK. This can be very costly for businesses. As we've mentioned, a lot of the exchange rates and a lot of these currencies are free floating, and so they can fluctuate heavily. As we know, with the regions, political and economic stability really can impact that currency. And so if you've been working on a project, let's say you have a local need for that currency, you've got contractors on site locally. After maybe 1 to 2 years, and you've accrued a large sum of that capital, and you're looking to repatriate back into the UK, that currency could have weakened against the sterling, anywhere up to sort of 10-15%. As we know, most UK businesses, their actual net profit margin is closer towards 5% on on expansion on these deals, and so it really can be quite detrimental to your bottom line. When you're considering that, one of the simple ways is budgeting, making sure your forecasts, your cash flow. So ensure that you've got sufficient liquidity in the required currencies to meet those payment terms. And as we say, if you're looking to repatriate those funds, if you can do that from a position of strength, and you have the advantage of not having to hold those funds immediately, then you can take advantage of what we can offer some clients of market orders, in which case we will take a request to exchange one form of currency for another at an agreed price in the market, which could be unachievable at the time, and so we can book that with the bank. And so if we have that rate of exchange targeted in the market, and let's say a few months go past, and the exchange rate for whatever reason reaches that level in one morning, that trade will be executed, and there again you can take advantage of some valuable pricing, which can ultimately make a big impact on your overall profit for the project and any revenue requirements you need.
Yeah, can you hear me okay, Emily? Yeah, brilliant. Just not sure whether the mic's working or not, but the other thing to consider, so the questions around sort of mid and end cycle, right? So it's a really good question. So let's say, for example, we're 6 months in to a 12-month contract. Yeah. The other thing to really consider is, although the price is fixed, the exchange rate is fixed. So you as a client understand and have got security in exchanging one currency for another and an agreed fixed rate. The other thing to really bear in mind is what's called margin call. Margin call is whereby the currency exchange rate has moved in such an aggressive way that you are now what's called offside. And what we have found with other
I'm so sorry, we lost you for a second,
yeah,
but
I know. Can you hear me?
Can you try? It's very tempting can we hear snippets of you and then you disappear? Let's see if we can hear. I think we've lost you for a second, Ricky. Maybe Harrison, can you talk about margin side, if that's the right terminology?
Yes, of course. So, this will all be explained with a client, prior to agreeing to the contract. And essentially what we mean is contract terms. Variation margin is something that should be explained, and you should be aware of this from your provider. It essentially means how far the deal or the transaction has moved away from the price in which it was agreed. So what we may require is a deposit to be held on account on the funds, and a variation margin. Agreed margin terms may be anywhere between 2.5% to 5%. And what that would mean is if the market was to move out of the money, and so the overall contracts, when you're looking to settle an amount in that currency, if that no longer meets that requirement, then we may call you for margin, which means we have to then hold additional capital on your account in order to secure that contract. As Provalgo, we have a contract with the bank that we make on behalf of one of our clients. And so we hold the liability for that contract. And so if the market at that time, if we had to settle that contract, then we would have to pay the additional 2.5-5% of those funds, which is why it's good to be aware of possible margin calls. And these can be costly for businesses unless they are fully explained and understood at the time of onboarding with the contract, particularly if you're looking into the terms of 1 million and above over a 2-year cycle. It's very likely that a volatile currency within that period of time, that exchange rate will fluctuate. And so unless we hold those funds on account to secure that contract, then that's where the term margin call comes from. And I believe there is essentially a film about it as well called Margin Call, which again, slightly off topic, but I recommend the watch. It's very good, and that essentially is what would happen in a foreign exchange contract.
Thank you so much, Harrison. Much appreciated. I wasn't expecting some film buff recommendations, but that sounds absolutely great. Can I just check in to see if we can hear Ricky? Can you say hello to us, Ricky?
Hi, can you hear me okay?
Yeah, that's great. Absolutely brilliant.
Apologies.
Sorry.
Yeah.
Oh no, don't worry. We've got it's wonderful to have Harrison here too. It means we can hear from both of you. Got it all covered. So I see that we just have we have about 5 minutes left. So just another call out to anybody listening. If you have any questions, please put them into the chat or into the question function. We have another very specific question from Ronan, who says, currently I am using Booker Rate with Barclays.net for my currency exchange. Their margin is 1 to 1.75% for each transfer, regardless of the currency used. What is your margin you charge for FX, please?
That's a really good question. Was the margin 1.75%?
So the way it's written is 1 to 1-1.75%.
75. Okay.
1 to 1. I think I read it as 1 to 1.75%.
1 to 1.75.
Between
okay.
There's an upper and a lower band.
Yeah. So to answer that question, it all depends on the volume that's being traded and what the majority currency is. If all of that is going into a major currency, so US dollars, euros, Swiss francs, Japanese yen, these are liquid currencies. And so you typically find that the pricing is more competitive. But if all of that currency flow is going into a more exotic currency, then you would typically find that those margins are wider. But at first glance, 1 to 1.75% does seem a little bit expensive, and it would lead me to believe that there might be some reason behind that. It may be because of the currencies being traded. But it may just be because that's the bank's rate, right? And I'm sort of hesitant not to overdo it with bank margins, but the whole reason why Provalgo exists is to reduce that margin that we've just heard. 1 to 1.75 is quite high. But our pricing would be bespoke depending on the type of client it is, what currency they're trading, how much they're dealing with. But I'm sure we could improve upon that.
I think it's just to sort of expand on Ricky's points. Look, working directly with a bank, we know that their business model, that their acquisition of the market is all around lending, mortgages, earning interest on your funds. So the bank's perspective on foreign exchange and corporate banking side really is just an added bonus luxury, which is why you would find these higher fees and margins associated with using your traditional bank. We we are not looking to replace the traditional banking model. If anything, we'd like to work alongside and coexist, working with corporate businesses, as we have we have lower costs to maintain, and we remain privately owned. And so all of our team and the functions, our core function is to deliver this product, and we do that efficiently. And as part of our Thingless as a wholesaler of foreign currency, as we mentioned, we're trading within the billions annually. And so collectively, all of our clients, they have a single market entry point to 14 banks who go to market, and they do fluctuate. It's an ongoing joke, but if there's a lot of euros in the market, then they're ready to get rid of them. So I think it does boil down to this is our principal products that we're looking to deliver for our clients, and we can do that at a more cost-effective rate. And the reason we're able to do that is, again, we have lower overheads than Barclays, and so they are looking to take advantage of their clients, for this simple service, which is why we would be, willing to take a look and certainly see if we can offer some further value around just a traditional exchange rate.
Thank you so much. Much appreciated, Ricky and Harrison. Now, we've come to the end of the session, so I'd just like to leave with one last question to both of you, which is what would be your one single golden nugget of recommendation to the listeners around managing their currency in the Middle East? There was one thing you wanted everyone to take away today.
One takeaway: reach out to reputable, regulated provider, and understand what the exchange rate is that you're dealing with, and of course seek some expert help with regards to mitigating that risk, because if left unhedged, you could be left with a very unprofitable contract. So maybe that just sort of summarizes the whole meeting. But look, don't overcomplicate this. There's a million things going on both in the world and in your business. Reach out to a licensed provider, speak to them. You want to understand what the exchange rate is, what the hedging terms are. We touched on margin call. You want to find out what those credit terms are, those hedging credit terms are, and of course the tenor and how long you're hedging that for. So don't try to do it alone. Is the takeaway message. Yeah.
Thank you so much. And Harrison, do you have anything to add?
Yeah, I would say everyone is a specialist in their own business, and I think taking ownership of that and working with a licensed provider who is a specialist in the market. If you feel as though you have a good price point or good margin, a good price at a bad time in the market is just simply not a good price. And so Ricky and I will both say we read up a lot on the train in our own spare time around around these markets and these currency fluctuations. And so looking to leverage your connections, working with specialists, really that can give you a competitive edge against a competitive market if you're looking to tender for a project and there's 5 other companies, if you are confident that you've got strong measures in place to be more competitive in your price point, that is what will put you further afield and really make the difference. So my big takeaway is really lean on specialists. There is a lot of information out there, but as I said, this is our day to day. As I would claim to have little to no understanding of designing a roller coaster, or looking to implement a scare ride. I would go to specialists, and I would start with Experience UK.
Oh, wonderful. Thank you so much, Harrison, and thank you so much, Ricky. It's been a really, really informative and brilliant session. Thank you for taking so much time with us and sharing all of that expertise and insights. And I hope that everybody listening online is, can get in touch with you. We're going to be recording this session and sending it out to everybody who's listening. So you can follow up if you want to go back and revisit some of the things that Provalgo have shared with us. Meanwhile, I'm sure Ricky and Harrison, you'll be keen to talk to everybody who's joined this session. So we'll put you in contact. And thank you very much. Thank you, everybody, also for joining us today. Everyone out there who I can't see.
Thank you very much for having us.
Thank you, Emily.
Really appreciate that. So thank you very much. Have a great afternoon, and I hope it's been useful for everybody watching. Thank you.
Great. Thank you. Bye-bye.
Bye.
Thanks,
Bye.
Emily. Bye-bye.